Good morning, investors and corporates. Welcome to SET Digital Roadshow third quarter 2022 performance review. The session will run about 45 minutes, including Q&A. Company will start the session by 30 minutes presentation, followed by 15 minute Q&A. During Q&A, investors may leave your questions in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the questions to the company directly. May I now invite PTT Exploration and Production Public Company Limited to start the presentation.
Thank you ค่ะ Good morning investor. Thank you for your interest in joining the SET Digital Roadshow with PTTEP today. I'm Arada from PTTEP IR team and here with me today is Kun Orachon Uyamapan, our senior management from Finance Division. And without further ado, I will pass the floor on to Kun Orachon to give you the company overview and the industry update for the third quarter. And after that, I will proceed with the project and financial result update. And after the end of the presentation, we will open the floor for Q&A. Thank you. Over to you, Kun Orachon.
Thank you, Kun Arada. Let me start with PTTEP overview. PTTEP is the largest exploration and production company in Thailand. We are a flagship company under PT Group focusing on upstream oil and gas business. For shareholding structure, our major shareholder is PTT, approximately 64%. Local and foreign institutions are 18% and 15% respectively, with the rest being retail investors. We are listed in SET since 1993 with market capitalization over $18 billion. Our focus area is Southeast Asia and Middle East, with more than 90% of sale volume come from these regions. Our home base is Thailand. We operate under a sustainability development framework with three main components, namely the High Performance Organization HPO and the Governance Risk and Compliance GRC and the Sustainable Value Creation SVC. All components emphasize our sustainability framework and lead us to be a strong leader of the sustainable company in Thailand. We are listed in DJSI for 8 consecutive years, as well as FTSE4Good and Thailand Sustainability Investment Index for many years. We also receive good ESG rating from MSCI and CDP. And we also have 3 strategies. The next slide on this. The first one is drive value. We focus on strengthening E&P business by maximize production and accelerate exploration into production, while maintain competitive unit costs and expand to gas and LNG business. The second is decarbonize. Focus on E&P net zero 2050. Carbon capture storage projects and greenhouse gas management activity. The last one is diversify, focusing on ARV scale up, gas to power, renewables and future energy, CCUS and technology development. Look at the asset portfolio. Yes. Currently, we have present over 50 projects in 15 countries. Our strategic focus area are Thailand, Southeast Asia, Middle East. In Thailand, which is our home base, and accounted for more than 61% of sale volume, mainly from Gulf gas. Key assets are G161 Elawan, G261 Bongkot, Contact 4, Atit and S1. In Southeast Asia, our main investments are in Myanmar and Malaysia, accounted for 24% of sale volume, and key assets are Sortika and Yadana in Myanmar, and several producing and exploration blocks in Malaysia. We also have projects in Vietnam and Indonesia. For in the Middle East, accounted for 15% of sales volume. Areas of focus are UAE and Oman. Assets are Oman Block 61, PDO Block 6, and several explorations in both Oman and UAE, as well as some midstream LNG business. Apart of these main locations, we also have presence in Africa, namely LNG project in Mozambique, which is still under development phase, and another 2 oil fields in Algeria and 1 in Angola. For other regions, we have exploration blocks in Australia and Mexico. Look at our book value of our assets by regions. Major chunks are Thailand 43%, Southeast Asia 25%, Africa 17%, and Middle East 13%. And next, I will talk a bit about energy trilemma. As you may know, when we talk about energy today, the world put more importance of 3 angles, which are security, sustainability, and affordability. When we comparing various energy sources in the view of these 3 angles, the balance point would be in the center of the triangle. Energies from different sources have its own advantage and disadvantage. According to the Global Energy Transition trend, coal and oil consumption are expected to eventually phase out, while renewables will grow significantly in the near term. Renewables in the short term to medium term might not be able to replace fossil fuel due to limitation of energy storage and infrastructure, while oil, which is probably the most secure energy source, but it's not sustainable. We believe that natural gas will play a dominant role during the global energy transition due to its cleanliness, less cost investment, and infrastructure readiness. Natural gas is forecast to increase in its contribution to the global fuel mix to 25% by 2050, which is 1/4 of total energy source combined. The investment in natural gas projects are required to build up to supply to serve future demands. This is in line with growing LNG demand to reach approximately 800 million tons per annum by 2040. That means natural gas gaining momentum as transition fuel. PTTEP aims to develop cleaner natural gas by using several technologies such as FGRU and CCS, which will eventually drive natural gas to the balance point of energy security, reasonable price, and sustainability. And next, Kun Arada will go through the project update and the rest of the presentation. Kun Arada, please.
Kun Arashon. I will touch on the key project update in the 3rd quarter of this year. So first, in Thailand, for G161 or Era-1 project, the current average gas production rate is about 210 million scf per day. And after that, after we entered the site in April, we have started drilling the additional production wells and completed the 4 wellhead platform installation with the target to achieve 8 wellhead platforms to be installed during this year, as well as the more than 100 of production wells to be drilled by the end of this year. And we expect the first ramp up of this project to be by the middle of next year to about 400 million scf per day, and so that we will reach 800 million scf per day as per our obligation under the PSC by early of the year 2024. Next, on the Malaysia and Thailand Joint Development Area, PTTEP was granted the extension of 10-year production period for until 2039 with the additional gas volume to be imported into Thailand from this project for about 30 million scf per day until the end of the year 2023. This is to support Thailand's gas demand. And we have also participated in the 24th Gulf of Thailand bid round as announced by the Department of Mineral Field of Thailand. And this is currently under the process of consideration by the government, and the award result is expected to be announced in February next year. Moving on to our next focus country, or Malaysia, we have currently total 8 exploration projects in Malaysia, as well as 3 producing projects. An evaluation of the petroleum potential for the key exploration project, or SK410B or Lang Lebar project, is currently underway, and the result will be available soon or early next year. For Myanmar, as you might already heard from the news that in August, we had the incident of Sotika gas pipeline leakage, which had caused 2 weeks of gas suspension to Thailand, and the repairment was completed and the project has resumed normal operation since August, and the project continues its drilling activity as planned to maintain the production. And in UAE, we had the exploration project, namely the Abu Dhabi Offshore 1 and 3, which are currently on geological study and evaluating the petroleum potential to prepare for our future development plan. And for Abu Dhabi Offshore 2, which we announced significant gas discovery of the first exploration well with total approximately 2.5 to 3.5 TCF of gas resources. The project will continue its drilling nearby the prospect areas to further evaluate potential of the other block nearby. And for other area in Algeria, we have commenced the oil production from Algeria HBR project in June this year, and the first sales volume recognition was achieved in Q4 this year. And the daily production of this project is currently about 13 kboed. And for Mozambique project, due to the force majeure that was declared last year by the operator of the project, or Total Energy, we are still unable to access the site, but we closely monitor the situation, and the operator is now considering the process to resume the construction back into the site, which is expected to be during next year that we could be able to get back into the site. And for Brazil project, during the last quarter, we had entered into the SPA to sell our entire investment into Brazil projects, which will be completed within this year. And after the completion, PTTEP will no longer have the project in Brazil, which aligns with the company's strategy, as Brazil is not our strategic area of focus. Next, I will move on to the financial result update for the third quarter. So our net profit Q on Q when compared Q3 this year to Q2 this year increased about $600 million. And this is as a result of the higher sales volume and the high offset with a little bit decline in selling price, while the unit cost was quite flat Q on Q. And the major increase in the profit was also as a result from the income tax that was significantly declined from the recognition of tax incentive of Malaysia Sabah Edge project, which is one-time gain that was reported in the quarter. On the non-operating item front, we reported net loss of $42 million, which are from the oil price hedging gain of about $94 million, offset with the impairment loss of about $95 million from the sales of Brazil projects. And for the result year-on-year, comparing the third quarter of this year with the third quarter of last year, the net profit are more than double. And this is significantly due to a rise in average selling price of about 21% following to global crude price rocket. And the average sales volume also increased by 15% from new projects that was start its operation last year, like the Oman Block 61 that we acquired in the first quarter of last year, and the Malaysia Sabah Edge project, which commenced the gas production in February last year. Next, on the sales volume Q on Q was increased by 12 kboed to 478k, mainly from the first full quarter realization of G161 project and MTJDA higher daily production rate. And the average selling price Q on Q slightly declined by 3% due to lower liquid selling price, which the Dubai average Q on Q declined by 7%. And while the gas price slightly increased by 1% from the previous quarter, and this is the effect of our 6 to 12 month lag time gas price adjustment. And our gas to liquid mix for the company is still about 73 to 27%. While the liquid will normally track to Dubai price, our gas will have a lag time of about 6 to 12 months according to the gas price adjustment mechanism. Next, on the year-on-year, the sales volume highly increased from Arctic gas production, which was increased from 220 to 280 million scf per day since Q1 this year, as well as the first production of G161 project since April that PTTEP started to be the operator of this project under the PSC. And the daily production currently is at about 200 to 220 million scf per day. The significant increase in sales volume year-on-year also a result of the Oman Block 61, which increased the production from 1,000 million scf per day during Q3 last year to about 1,500 million scf per day during this year. And the average selling price increased 20% due to the global liquid oil price. Next, on the unit cost Q on Q was quite flat, but if we look into each component of the cost, you will see that the DD&A per unit was higher, and this is from the recognition of more completed wells in the Gulf of Thailand project, including the production bonus payment of G161 or Erawan project, while the exploration expense also increased from well write-off in Australia upon the relinquishment of the areas back to the government. And other components slightly declined due to the volume effect Q on Q. And next, on the year-on-year front, we reported lower DD&A per unit and offset with a higher royalty expense as an increase in the average selling price year-on-year, and royalty in Thai project was computed based on their sales revenue, coupled with the higher upfront OPEX of the maintenance and inspection of G161 project. So these two components mainly increased from last year. Next, on the cash flow and financial position, cash flow for 9 months of this year, we maintained EBITDA margin at about 76%, and this generated the operating cash inflow before tax of about 4.5 billion, and tax expense and dividend for the 9 months was about 2.1 billion. So at the end of September, we had the net cash inflow of about $877 million, and the cash on hand position rise from 2.6 from the beginning of the year to about $3.4 billion. And for the debt structure, the debt to equity ratio stood at 0.33 times, which is still below our policy of 0.5 times. The average cost of debt was a little bit increased from 2021 from the increased market interest rate from to stand at about 3.7%. And our fixed to float percentage of the debt was at 83% and 17% respectively. For the volatility of Thai baht and USD currency, it has no material impact to our performance as our debt in Thai baht currency was all hedged into US dollars, and our functional currency of the financial statement preparation is also in US dollar as well. So we have a minimal impact from the Thai baht depreciation. Next, and it is the last part of the presentation, is the financial outlook for the fourth quarter and for the entire 2022. The average sales volume for the fiscal year is expected to be about 468 kboed, and this is this translated into a growth from 2021 sales volume, and this is mainly from the operatorship transfer of G161, as well as the first oil production of Algeria Hassi-Barra gas project, and this is also the first full year production of Malaysia Block H and Oman Block 61. And so we expect that the sales volume will peak in the last quarter. In Q4, we expect the sales volume to nearly reach 500 kboed. And gas price for this fiscal year is expected to be about $6.3 per MMBTU, which will be peak in Q4 as well from Gulf of Thailand project gas price adjustment that will take place in October this year, and it will reflect the higher oil price since the beginning of this year to date. And the last part is the average unit cost for 2022. We expect at about $29 to $30 per BOE, which is slightly higher than last year. And this is due to the royalty expense from higher average selling price of the company, as well as higher OPEX costs for the first year production of G161 project and our effort to ramp up the production of G1 as soon as we can. And for the EBITDA margin, we are still able to maintain the profitability at about 70 to 75%. And this guidance was based on Dubai oil price average for the entire year at about $97 per barrel. So this is the end of the presentation. So if any investors has any question after this session or anytime, you can drop us an email at ir@pttep.com, or you can reach out directly to us according our contact in the website. So thank you for today. Bye bye.